I focus my energy on trading the SPY ETF. I trade the open and I take profit at 20%. There are certain setups that I look for prior to entering a trade when I'm trading the SPY at the open. Now, something that I consistently do here, especially when we have gaps in the morning, is I fill in the gap. But this time I want to do a visual fill in because you might not always have time to draw your trend line, right? So it's very important for you to be able to visually fill in the gap. So this is a bullish gap, all right? So imagine that the space between the last candle at 671.08 is green going all the way up to 677.40. So that's a green candle. So now we are assessing the pullback. It's 9:31. All right, so just to give myself a fair review, I have a habit of entering the first candle prematurely. So although I ultimately have the direction right and I am consistently profitable, that extra level of patience is going to serve me so well once I master it. But right now, I make sure that I size my position small enough for me to be able to be defensive. And what do I mean by being defensive? I mean that I can add a second contract to my position to reduce or average down the size of the loss as long as I'm still convicted that we're going in the right direction. The key to this is not using large portions of your account on individual trades. All right, you want to continue to have soldiers standing ready to join the war. You don't want to, be Braveheart running through a field of horses and soldiers with swords and thinking you just gonna slice and dice everything in your way. No, you need support, you need backup, so you have to time yourself. So as you can see, I added a second contract, but because we're using such tight expiration dates, as you can see, the price is below where I entered. I'm in puts, but I'm still down. And that's because of the theta decay. The theta is the time that it takes to go from a high price to a low price, eats away at the value of the option when you arrive at that lower price. So that's why it's important to keep soldiers readily available to join the war, because it can reduce the deficit and give you more of a likelihood, increase your probability of winning the trade. All right, so we don't just want to focus on direction, we also want to focus on time, and not just the time as far as the expiration date, but you timing your entries. It's a beautiful thing to be able to make money in minutes. This particular trade, although it seems like I'm gonna make more money, I didn't exit this trade until about 11 a.m. So that's about 90 minutes in this trade. And I don't want to be in a trade that long. I would rather take a smaller win for less time, so that I'm also managing my relationship with the market, managing the time that I'm spending with the charts. So trading the open is very powerful when you master the timing, the direction, and your option selection. This is why the SPY ETF is such a promising option, because the bid-ask spread is typically tight, 1 cent to 2 cents. The contract sizes are small enough because they offer 0 days till expiration, 1 day till expiration, 2 days until expiration, or 3 days until expiration. You can put a small amount of money up and still have a reasonable size delta. So that would allow you to add contracts so that you can get your desired move once we can confirm that you have chosen the right direction. So something else that I want to be mindful of is that I'm also showing you times in which I'm adding to my losing positions, dollar cost averaging down. The real flex is for you to be able to add to your winners. So if we're looking at a 20% profit target, let's start to add to our winners when we're up 5%, 10%, and we've broken through a level of support or resistance depending on the direction that we're going in. We don't want to continue to add to our losers because eventually it's going to catch up with us. It's going to crash, or it's going to take off and take all of the contracts that you've added on, that you've dollar cost averaged in. It's going to take all of those contracts down to zero. And you don't want to be on that side of the trade. So although this looks cool, I did manage my position well enough to recover from being impatient in the beginning of the trading day. I was impatient at the open, which caused me to have to manage a losing trade longer. We don't want to manage our losers. We want to cut the losers. We want to manage hard-working, producing contracts. We want to manage high productivity. That's what we want to manage. We don't want to manage losers. All right, so as you can see, we started with that big gap. We visually filled in the gap. We're watching our P&L climb. We're not focused on dollar amount. We're focused on what's happening on the chart and percentage. I want you to also pay very close attention to this green line going across the screen. This green line is the 50-period moving average. Now, for some reason, the SPY ETF has a special relationship with the 50-period simple moving average. All right, this moving average is almost like a magnet. All right, and it is a point where the stock price starts to make a choice. Sometimes it'll power through the other moving averages, but if we break through the 50-period moving average, oftentimes we're going to continue toward the 200-period moving average, whether that moving average is above or below. So if you find yourself far away from the moving averages at the open, not all the time, but sometimes the price will reverse back to one of the averages, which is one of the moving averages. And typically, it's not going to rest until it reaches that 50-period simple moving average. That's from my experience. All right, I'm not as experienced as some. So as you can see, we broke through the 50-period moving average, and we have some continuation to the downside. All right, now because I've added contracts, now that we're back green, things are going well for us. But again, why not add contracts here? Instead of cutting my play, I should be adding contracts to my winners just as I added contracts to my losers. But in order to do that, you have to be defensive with your capital, protect your account, protect your buying power. You need power to be defensive. All right, this would be a beautiful opportunity to add more contracts to an already winning position. So keep that in mind moving forward. You don't always have to dollar cost average down. You can also consider dollar cost averaging up. All right, and that's something that I'm looking forward to demonstrating for you all in a future video. All right, so peace and love, and I hope you get rich. Don't forget to visit stockmarketdaddy.com to consider taking the assessment, all right, to decide and determine if you have a problem gambling. All right, I'll see you in the next video. Please subscribe to the channel, comment down below, and like this video. Peace.